وقد أصبحت تلك الحاضنة التي أطلقها بنك قطر للتنمية بالتعاون مع دار الإنماء الاجتماعي إحدى أكبر حاضنات الأعمال المتعددة الاستخدامات في منطقة الشرق الأوسط وشمال أفريقيا. من حيث ما تقدمه من أعمال وخدمات، فقد قامت تلك الحاضنة بتخريج دفعتين من رواد الأعمال ضمن برنامج ريادة الأعمال، كما قامت باحتضان 33 شركة محلية وتدريب أكثر من 100 شخص من رواد الأعمال في عام 2014. وتنفيذاً للسياسات الخاصة بتسهيل الإجراءات وتقديم الخدمات وفقاً لأعلى المستويات والمعايير، فقد قام بنك قطر للتنمية باستحداث نظام النافذة الواحدة، وذلك بهدف تطوير ودعم المشروعات الصغيرة والمتوسطة وتعزيز الجهود المبذولة لتقديم خدمة أفضل من خلال توفير جميع الموارد المالية والخبرات الفنية والترخيص من مكان واحد. السادة الحضور، إنني على ثقة بأن المناقشات التي ستجرى خلال هذا المنتدى ستقدم وجهات النظر وأفكار عملية هامة لصناع القرار، كما أن المخرجات الرئيسية لهذا المنتدى سوف تعود بالنفع على صناع القرار وينعكس على أعمالهم التنموية. وفي الختام أتمنى لهذا الملتقى مواصلة النجاح والتوفيق في تحقيق الأهداف المهمة التي يعقد من أجلها، وأرحب مجدداً بالحضور الكريم متمنياً للسادة الضيوف طيب الإقامة في دولة قطر، والسلام عليكم ورحمة الله وبركاته.
Thank you very much, Excellency Sheikh Abdullah Saoud Al Thani, for your enlightening and inspiring inauguration speech. Mr. Mohammed Amin Ujjan, Chairman ADFIMI, will now present a token of appreciation to His Excellency Sheikh Abdullah Saoud Al Thani, Governor of Qatar Central Bank. Mr. Mohammed Amin Ujjan would like to seize this opportunity to present a token of appreciation to the sponsor and contributors of the forum. I therefore invite Dr. Abdullatif Bello, Chief Economist, IDB, to come to the stage to receive a token of appreciation on behalf of His Excellency Dr. Ahmed Muhammad Ali, President of IDB Group, who could not be present here due to a sudden change of schedule. Mr. Amin Mohammed Ujjan will make the presentation. Now I would like to invite Mr. Dinos Konstantinidis, Chief Strategy Officer on behalf of Mr. Basel Gamal, Group CEO, Qatar Islamic Bank, who is our second main sponsor of the event, to the stage to receive a token of appreciation from Mr. Mohammed Amin Ujjan, Chairman of ADFIMI. The next token of appreciation will be presented to Mr. Adel Mustafawi. Mr. Adel Mustafawi, Chief Executive Officer of Masraf Al Rayyan Group, for being platinum sponsor of the forum by Mr. Mohammed Amin Ujjan, Chairman of ADFIMI. Finally, I now would like to call Dr. Ahmed Farouk Aysan. Dr. Ahmed Farouk Aysan, who is member of the board and a member of monetary policy committees of the Central Bank of Republic of Turkey, on the stage to receive a token of appreciation from Mr. Mohammed Amin Ujjan, Chairman of ADFIMI, for his contribution to the substance of the forum. I would now request His Excellency Sheikh Abdullah Saud Al Thani, the Governor of Qatar General Bank, and the recipients of the token of appreciation, and other CEOs to come to the stage for a group photo. Of course, this will be followed by a coffee break, and we shall come back for our first session at 11 a.m. sharp. Assalamu alaikum. We are now ready to start our first session, which has a theme of rethinking monetary policy strategies, past and future. Mr. Advan Reit, a Senior Advisor, Monetary Policy Directorate, European Central Bank, will moderate this session. Advan Reit is a Senior Advisor in the Directorate Monetary Policy of the European Central Bank, ECB, and Secretary of the ECB Occasional Paper Series. He studied economics at the Erasmus University Rotterdam and started his career with the Netherlands Bank in 1987. He joined the European Monetary Institute in the end of 1994 and the European Central Bank when it was established in mid-1998. At the ECB, he held several management positions, successively taking charge of the Monetary Policy Stance Unit, the EU Countries Division, and the Fiscal Policy Division. He has published work on European integration, monetary policy, fiscal policy, structural reforms, financial regulations, and the flow of funds. I now invite Mr. Advan Reit to moderate this session.
So let me first say that I'm very happy to be here in Doha, and I should also like to thank the ADFIMI for inviting me to attend this forum. The forum seeks to review the lessons for central banking since the global financial crisis started, which is already 9 years ago now. And we know that central banks have a mandate for price stability, or more broadly for macroeconomic stability. But during the crisis, some central banks also had to contribute to restoring financial stability. And in fulfilling their tasks, central banks had to combine their conventional monetary policy tools with unconventional tools. In a way, as a result, they entered a new era of central banking. The first session of this forum will in particular review the past and the future of monetary policy strategies. And we have 4 eminent speakers in our panel, and they will guide us through this topic, covering, for example, flexible inflation targeting, quantitative easing, the management of capital flows, and dual banking systems. So I would like to invite the four speakers to come to this panel, and they are Dr. Ahmed Farouk Aysan, Professor Dr. Mansour Ibrahim, Professor Dr. Kabir Hassan, and Dr. Solikin Euro. We will start this session with the presentation by Dr. Ahmed Farouk Aysan. He is a member of the board and member of the Monetary Policy Committee of the Central Bank of the Republic of Turkey. Now I would like to invite all speakers to speak for about 15 to 20 minutes. And then my idea was to have one or two questions from the audience, because you may have some burning issues on your mind, so that then also the speaker can reply to that. So, Ahmed, the floor is yours.
Okay, thank you, Ed, for presenting me and also chairing the session. And also I would like to extend my thanks to ADFIMI and also Central Bank of Qatar, and all the sponsors and organizers and all the speakers also. It is my pleasure to be here. I would like to explain about the experience of Turkey over the last 5 years. We have several papers actually about the country experience of Turkey, especially after global crisis. Actually the topic of this conference is quite interesting. We don't see many conferences about the developmental central banking. So it's somewhat not very old concept, but that is why the central bank are around actually. But we seem to forget that, especially in the last 20 years or so, especially with the post-Washington consensus. But at the end, for all the central banks, the main objective is development. But we reach that objective through price stability, through financial stability, and but the ultimate aim is to be able to increase the growth path of the country and to reach higher level of development. But definitely, as Governor El-Thani has mentioned, it's quite a complicated issue. Once we start getting into the development objective, we start getting into the issues of the government. Some other ministries are also involved in development objective. So, especially in the last 20 years, we are more focused on price stability objective, because we know that once we reduce inflation, when we reach price stability, the growth will come up and we will reach our development objective. But the issue is that after 2008 crisis, the world has changed. It didn't just change for developed countries, it also changed for emerging market countries, but probably it even changed more for developed countries, because right now many developed countries have even negative interest rates. They don't have any problem at all about the price stability. They don't have even problem much about the financial stability. We have seen this over the last 8-9 years. We can facilitate the central banks and reach the financial stability objectives, but still we don't have much growth. So this brings us the new issue of how, in spite of the fact that we achieve price stability and the financial stability, the growth objective or the developmental objectives do not follow. So that brings us a new issues for central bankers, for economists in general. So that's why this developmental central banking issues are very likely to be discussed in the future as well. for developed countries, and same for emerging market countries, because probably emerging market countries are less affected by global crisis, and still we have price stability problems. But still, emerging market countries are affected by the policies of developed countries' central banks. So even though they don't have much problems, they have to deal with the too much capital inflow problem, for example. They don't particularly exercise their monetary policies independent of developed countries. Like the Helen Race approach shows us, the developing countries or the emerging market countries' central banks are mainly motivated by the policies of the advanced developed countries' central banks. And this is especially important right now, as you observe. For example, last January, we were quite pessimistic. We were concerned about the developed countries, especially Fed, might increase the interest rate too quickly. But now in April, the world has changed. It goes back to 2011 sort of scenario where there is very much likelihood of too much capital inflow to emerging markets. So this is probably even more of a challenge for emerging market countries, because the currencies are appreciated, the countries lose their competitive advantage, and the unfortunate thing is that this sort of changes in the global monetary policies led the short-term capital inflows to emerging market countries. Right now we don't have problem in the initial stages of capital inflows, but in a couple of years' time we have to deal with the capital outflows. In this presentation I would like to present you the Turkish experience, because this is not something new. Most likely we are going to experience a similar scenario in the upcoming years. The developed countries' central banks continue to continue their monetary expansions, and the emerging market countries need to offset this too much capital inflow through macroprudential policies, through some innovative macroprudential policies. Again, we are back to 2011, or we are back to 2010. So that's why what we learned in that period from 2010 to 2013, especially up to tapering announcement, is quite relevant, because now we are more experienced. In 2010 or 11, when too much capital inflow started to emerging markets, we are relatively less experienced, but now we have more experience. So for the future, the country experiences are going to be even more important. So that's why in this presentation I would like to share that experience with you. And this is at the end the developmental thing, which short-term capital inflow might be reversed in 6 months' time, or in 1 year, in 2 years. Again, we are going to face the similar scenario. So it's good to have such an experience. And Turkey actually displays a very good example in that, because we have implemented many unconventional monetary policies, macroprudential policies. Turkish Central Bank is shown as an example of how an emerging market is reacting to policies of the developed countries' central banks. So I guess that experience will help us for other countries. I mean, Indonesia has a very interesting example also. That's why and these are, by the way, not in theory. I mean, the academics are still writing papers about those. The experiences seem to be ahead of the theory right now, so that's why sharing the experiences will be quite relevant. So I also look forward to hearing the experience of other countries like Indonesia. They have also very interesting experience. So let me move. So the presentation is a bit long, so I will, if you like, I can give the presentation, but I will just touch upon a certain slides, not all of them. But it's a very timely presentation again, because most likely emerging market countries will receive short-term capital inflows in the upcoming months. It will continue doing so. So I will talk about the challenges. I will talk shortly about the new central banking, and I will mainly explain the country experiences. And there is an empirical part at the end. I will not go into details, but empirical evidence also show that Turkish Central Bank policies adopted after 2010 was quite influential in constraining the capital inflows and to making the country ready for what happened after May 2013 when tapering announcement has been done. We have 2 empirical papers on that. So what are the main challenges? The main challenges for emerging market country central banks are too much capital inflow. Again, this is not something new. We experienced this after 2009 crisis, especially in 2010 and 2011. There's too much capital inflow. There's an appreciation of currencies. And this is not due to the independent monetary policies of the emerging market central banks, but because of the monetary policies of the central banks of developed countries. So the global stress increased the capital inflow volatility. So what do we want? We don't want the short-term capital inflows because we know that they are making the country quite fragile. At the beginning, when there is capital inflow, it is good, but we know that at some point it might be reversed. So one policy is to prevent the capital outflows, but it is quite difficult in bad times. So the better